Hi friends, welcome back. Now we'll move to the last part of salaries. So which is going to be the PF and the deduction from salary income. So as far as the PF is concerned, we know there are three types of provident funds: statutory provident fund, recognized provident fund, and unrecognized provident fund. Now, in the case of an SPF, the contribution, the interest, the lump sum receipt, everything is going to be exempt from tax. Don't worry about it. But we take the case of a recognized provident fund. There are three aspects which one is the employer's contribution, then the interest part of it, then the amount received by the employee after leaving the job, which could be on account of retirement or resignation. Today, the requirement of the government is you should contribute at least 12%. Therefore, the employer's contribution up to 12% is exempt. The contribution in excess of 12% is going to be taxable. As regards the interest, so up to 25th of August 2010, 9.5% is going to be exempt, and after that, 8.5% of the amount contributed. So only the interest exemption is restricted to 8.5%. So for your examination, make note of this particular point. If it is going to be an unrecognized provident fund, the employer's contribution is not taxable, the interest is also not taxable. But however, when the amount is received after retirement, then the taxability is going to arise. The employer's contribution plus interest thereon is going to be taxable under salaries. The employee's contribution is already suffered tax, therefore the question of taxing that does not arise, but the interest on employee's contribution will go to income from other sources. As regards RPF, when you receive after leaving the job, it is going to be exempt from tax provided the employee renders minimum of 5 years of service. But if it gets before 5 years, then the exemption is available only on account of closure of business, or the employee transfer from one balance to another, or reasons which are beyond the control of the employee. Now, moving from PF to the last part of it, deductions, there are only two deductions available today. So 16 provides for deduction, 16.1 standard deduction is no longer there. Now, section 16.2 provides for a standard deduction for deduction for entertainment allowance. This is available only for government employees. 20% of basic 5,000 or entertainment allowance actually received. Those are the amount which are going to be deductible. The least of the three is going to be deductible. The only catch point here: include first entertainment allowance in the salary income and then provide deduction separately. The last deduction is professional tax or tax on employment. So whatever tax paid by the employee towards professional tax can be deducted. So these are the deductions. Now, so once you understand the entire concept of salaries, you can work out in the examination problems the same order. First try to take salary, then allowances, then benefits, then your retirement benefit, PF. Likewise, you can do the problem. So the only thing is that you have to remember the provisions, and if you listen to this videos a couple of times, it's pretty easy for you to remember. Now sometimes hearing and listening will also add to your reading skills. So I'm sure that all you guys will definitely score beautifully in salaries. You just repeatedly go through this couple of times. Now, so what are the other points which need to take out? Especially there are going to be some 8 questions with half a mark and 1 mark each, where they test you on under which head of income certain incomes will be taxable. So looking from the salaries point of view, the areas which you need to really watch out here are: 1, family pension. No employer-employee relationship, therefore family pension will go to income from other sources. Salary of chief minister. The salary of MPs and MLAs are taxed under other sources, but chief minister's salary will be taxable only under salaries. Salaries of Supreme Court and High Court judges, even though there are no employer-employee relationship, is going to be taxable only under salaries. And then the salary paid to the partners will not be taxable under salaries, it's going to be taxable under business income. So these are some of the important points. Similarly, if an Indian citizen receives salary outside India, if he is also working outside India, then the income does not arise in India, there is no tax. But however, if the salary is paid by the government, then it will be deemed to accrue or arise in India. You have to pay tax in India even though the service is rendered outside India. The only advantage here, the allowances and purposes will be exempt from tax under section 10(7). So as a theory question, you can also go through what is profit in lieu of salary. Whatever we discussed in PF is a profit in lieu of salary. So again, you can also go through forfeiture of salary versus surrender of salary. One time reading can be taken. So these are some of the other questions which you can expect in salaries. Right? Thank you. All the very best. So we'll catch up with capital gains in business income in our subsequent videos.